It is a public holiday in Japan, and history suggests that this is when the Ministry of Finance and Bank of Japan like to do their thing in terms of intervention. And we've got the US jobs report coming in a few hours as well. Is the time ripe to have another run at defending the yen?
I think it's certainly something which was in the discussions for the last at least few weeks as the yen was weakening. There's clearly the intervention, obviously, from the ministry standpoint to actually stabilize. But taking a step back, if I look back last couple of years, we had the intervention back in September and October of 2022. And one thing which is fundamentally something one needs to think about, the intervention can slow down the direction of travel or temporarily change the direction of travel. But longer term, that will come back unless there is a shift in policy. And I think that's where the markets will start focusing on point forward, because this will not change the direction permanently.
Yeah, and it's a very important point that you make, especially as we do await that jobs data. And with that in mind, do you think there's a risk that we could retest those 160 levels?
Not in the immediate term, because obviously as the currency pair vol has gone up, as well as the risk of intervention, the market participants will need to pare down their positions from a notional terms. But if you take a 3 to 6 month view, can we retest 160? I do believe we can, if there is no real shift from a policy stance, which is higher for longer in the US and slower normalization in case of Bank of Japan keeping the real rates negative.